Hello, everyone. Welcome back to another Monday Market Update. I'm Caitlin McKeag. I am a real estate broker here in Phoenix, Arizona. Thanks for joining me. Every Monday, I'm here talking about what's going on in the Phoenix real estate market. So if you are buying, selling, or investing, or even renting, hopefully this information is helpful to you. So hit the subscribe button so you don't miss this every Monday. And if there's anything I can do to help, make sure you reach out to me. So let's start as we always do. Let's talk about what's going on in the economy. And we had, let me get my screen set up here. We had the PPI numbers come out last week. And what that means is that is the producer price index. So essentially, that's a measure of what companies get for their products. And this number came out last week. It increased by 0.3% for the month and 7.4% from a year ago. This was slightly higher than the estimates or expectation. And so with that, the stocks kind of fell with this announcement last week. However, everyone is pretty interested in seeing what the CPI data is going to be, which will come out tomorrow. So Tuesday we have CPI, and Wednesday we have the Fed's final announcement of the year of what they will be doing with interest rates. So that's kind of where we are anxiously anticipating what will be happening next. Let's talk a little bit about that. Inflation data, Fed meeting will set the table for 2023, what to know this week. So the CPI will be coming out tomorrow. They are anticipating about 0.3% a rise in last month. So the CPI is the consumer price index. So similar to the PPI, but we're looking more from the lens of a consumer versus what companies pay for products. And this is going to, if it does come in at 0.3%, it would be a marginal deceleration from the 0.4% that we saw in October. They're also looking at the core CPI, which takes out the food and energy components of the report, and that is expected to have risen 6.1%, slightly less than 6.3 in October. So we will see where this ends up tomorrow when we get these numbers, and surely the market will react one way or the other, which the reason this is important is because when that happens, that also affects mortgage interest rates, which then affect the real estate market. So it is all connected for sure. Also talking about the Fed meeting on Wednesday, they will decide what they're going to do with the last rate hike of the year, the seventh rate hike. It seems that it is going to be 0.5, 50 basis points is going to be the increase. That's what they've been talking about for a while. Obviously, if we get some surprising news tomorrow with the CPI, that could possibly change the direction where we're going, but it's not likely. They seem pretty certain on that, slowing down from those 75 basis point increases, and but still being very hawkish on bringing down inflation and not taking their foot off the gas pedal with these hikes. So we'll see what Wednesday brings. So big news in the economy this week, from CPI tomorrow to Fed meeting Wednesday. And again, keep your eye on mortgage rates, because all of these announcements can certainly affect where we stand with mortgage interest rates. So if you're a buyer looking to lock in a rate, keep your eye out and find out whether they go up or down, or they might just stay the same. Anyone's guess at this point. So we'll see what the rest of the week has to bring. So let's talk about home prices, right? So that's always the hot topic. And as we've been talking about homes, or we've been talking about market softening and crashing, if that is what you want to call it, or if that's what you anticipate is still on the way. I have this article here from the New York Post. U.S. home prices will post first year-over-year decline in a decade in 2023. So I was reading a little bit through this, and I don't like to look at real estate nationally, because it is hard to, in my opinion, just look at that from a national scale because every market behaves a little bit differently. But they do mention lovely Phoenix in here. Home prices are expected to fall most precipitously in so-called pandemic boom towns that attracted buyers in 2020 and 2021. Cities most at risk include Austin, Texas, Boise, and Phoenix. So were called out in this article, and I don't disagree. We are certainly one of those areas that saw massive gains in our home prices over the last 2 years, and it's reasonable to expect that the pullback in demand is going to affect us. It already has. Our home prices are down about 12%. And realistically, as shocking as a headline may be, where you have a year-over-year decline, it makes perfect sense because there's no way we're going to be meeting the beginning of 2022's home prices with the 12% decline we've seen since May. So we're already starting out lower or just as low as we were in 2022 in the beginning of the year. And so I was just curious to see what these numbers looked like here in Phoenix and just take a look at where we're at now compared to where we were at last year and where the median home price is on a graph. So let's look at that together. So here we are. This year we are the greenish yellow line at 420 and blue line was 2021. So the median is sitting the same as it was November of 2021. So if you want to know where home prices are at, that is your answer. We're at November of 2021 pricing. And obviously with the trend of where the median sales price has been going this year, we're likely going to see these two lines cross and 2022 prices are going to go under this increase at the end of the year of 2021. And then we can look at the beginning of this year. We started at 433. So obviously if we stay at 420 or go below, we are going to have that deficit between what January's pricing was to today. So we'll see that year over year decline. And same thing goes with appreciation as well. So as we get into next year, just be prepared. That's what the headlines are going to say, is that the year over year appreciation and year over year prices are declining or lower for the first time. And all of that makes sense because we had huge gains and then we came back down. But what you do have to remember as a homeowner is none of this really matters to you unless you need to sell right now, right? So if you did buy in the last year, home prices will fluctuate. And unless you need to sell right now, you're not truly taking that loss, right? You would take the loss if you had to sell now, but looking towards how long you may be holding that house for, 5 years, 10 years, whatever that is, keep in mind that things will fluctuate over time. So it's not the most catastrophic thing to think about if you don't need to sell at the moment. However, if you did buy in the last 6 months and you do need to sell that property, you are looking at a negative number for sure, especially when you start adding in fees and the cost of a sale. So unfortunately, that is the situation for some folks, but in the long term, you got to remember we had gains in the last 2 years that were not normal. So it makes a lot of sense that we're going to reset a little bit, right? So losing some of this equity or appreciation that we've gained isn't the worst thing in the world. And it begs the question of where would we end up anyway if we had had normal appreciation from 2020 until today. If we were appreciating like 2 to 3% a year, somewhere in there, maybe 5%, where would we be today in terms of those median prices, and how far off are we from that, or how much can we lose before we hit that number? And I don't have that to share with you today, but that is something that I'd like to look into because it all depends on how you're looking at this. A loss of 12% since May feels and sounds awful, but when you think about how much we've gained in excess that is not normal, we're just still in that correction phase. So when you start seeing those articles that we have these year over year declines for the first time in a decade, this is what they're talking about. So let's talk about the Cromford Market Index, which many of you are great followers of. If you're new here, this is a indicator that the Cromford report puts together, and it really helps us understand supply and demand in the market and helps us understand where the market is heading. And the way that they break this down is that any reading between 90 to 110 is a balanced market. Any reading above 110 is a seller's market, and below 90 is a buyer's market. And you guys might be surprised that this week we're at 89.7, which is an increase from last week. Last week we were at 88.3, maybe somewhere in there. So we've actually increased from last week to this week, which is, I think, the second week in a row that we've seen a slight increase. Very slight, mind you, but we have seen a change. And one of the reasons for this change, or probably the leading reason, is that our supply is really low and getting lower. We're not seeing a lot of new homes come on the market. I'm going to break those numbers down for you in a minute here, but that supply is just low, staying low and stagnant. And although our demand is pretty low as well, the supply, the lack of this increase in supply is what's turning the market closer towards getting back to balance and away from moving into that buyer's market as we were. So technically, we're still in this little buyer's market right now at 89.7, but truly, closer to balance. So of course, we're looking at this. This is overall Phoenix Metro, and we can break this down by major city, which the Cromford report does an excellent job at. So I'm going to pull this up here so you guys can see what your city looks like this week. And you may notice that we have a lot of green arrows this week. We actually have 7 green arrows on this chart, which we haven't seen in quite a while. I'm going to take this off so you guys can see that. And we actually have, I think, 7 arrows on here. They all improved for sellers. The only cities that actually saw a decline in the last week were Fountain Hills, Goodyear, Maricopa, Scottsdale, and Tolleson. So very few that saw a decline. The rest kind of either improved for sellers or stayed as normal in this kind of balanced range. So it's interesting to see this again. This is mainly because we're just not getting a lot of supply, and demand has remained low as well. So there's just not enough movement going on to really push us further into a buyer's market. Now, if you're new, the red arrows mean that this is all looked at from a seller's perspective. So a red arrow means that we are moving in the direction that's favorable to buyers, and a green arrow is moving in the direction favorable to sellers. So all of those cities listed with a green arrow: Cave Creek, Chandler, Glendale, Gilbert, Surprise, Peoria, and Avondale all started to get more positive if you're a seller. Now, mind you, all these numbers are still low. So Avondale is truly in a buyer's market still, as well as Peoria and Surprise. Those are buyer's markets. Gilbert and Glendale also buyer's markets, and Chandler just on the cusp there. And then we have Cave Creek, which is technically a seller's market. So just because they improved for sellers doesn't mean that all of a sudden you can list your house at whatever you want and get 10 offers. That's not what we're saying here. We're just saying that there was slight improvement and it wasn't deteriorating from the seller's standpoint. So I thought that was interesting to see, and we'll see if this continues. And what is really going to be kind of the telling factor is once we get into that like second, third week in January, we'll start to see more of the trajectory of the market for next year. Because right now we have a lot of seasonal influence. Things are much, much slower this time of year. Regardless, we usually have lower number of new listings and lower demand. So it's not strange to see things kind of slow down so much where it's just really hard to tell what a true trend is. So I believe that as we get into mid-January, we're going to have a much better idea of what's going to happen, whether we'll see more increase in supply or if that demand is going to pop back up in response to whatever happens with interest rates, or just new year, new me mindset when people want to go out and buy homes. So we'll see. It's interesting to watch this, but taking it with a grain of salt just because of the seasonality of things. Now, I mentioned a few times here that supply is really the factor that is putting us in this situation because supply is low and remaining very low. So let's talk about these numbers. We actually have the lowest number of new listings in December that we've seen since 2005. And this graph here from the Cromford report really illustrates that. We have so far in December only had 1,099 new listings come to market. And in December of 2005, which was close to the next lowest, we also have 2006 here at 2,600, 2,700 by this time in the month in December. So we are definitely not gaining new listings as we have traditionally in the past, even though this is a slower month. And going back, that far, we're not seeing anything like this in the past. So the Cromford report is saying that when you look at these numbers, they're actually down 45% year over year. So if we're comparing to 2022 or 2021, I'm already in 2023, I guess. But this is, abnormal for this time of year. And I think one of the reasons, even though we always have lower numbers of listings during the holidays, this is abnormally low. And I think one of the reasons is because this market is just kind of stagnant. And I think most sellers, unless you really need to sell, it's not a pretty picture for you. So you're not interested in listing your house right now and taking the risk and dealing with the inconvenience. And a lot of people don't need to sell. So that's where we stand right now with the Phoenix real estate market. And I will continue to keep my eyes out this week for what's happening with CPI, the Fed meeting, mortgage rates, and all of that good stuff so I can share it with you next week. So make sure to come back next week, watch my newest video and get your update there, and check the description below because I have links to a free home value as well as searching my MLS if you're looking for homes, and of course, a link to chat with me if you have any questions or things that I can help you with. So thank you guys. Appreciate you joining me as always. I hope you have a wonderful Monday evening, and I will be back next week. I'm Caitlin McKegg with the Desert Dreamers team.